Hello, and welcome to this very first edition of CFO Central, part of the Pragmatist newsletter. So, during this session, what we're going to be doing is answering a question from a subscriber, anything in relation to accounting, tax, and tech, where I can, offer some support and guidance. So, this week's question comes from Mark Masters, and his question was, I'd like to buy an iPhone 15. Can I buy that through my company and not me personally? So, to all intents and purposes, a very simple, straightforward question that Mark is asking there. So, the first thing that we have to establish is, can Mark actually purchase an iPhone 15 through his business? Obviously, you can go ahead and Google this. The answer for you is yes. There are some exemptions and rules around this, but if we just take a quick look. So, HMRC guidance is quite clear. An employer providing mobile phones to employees. So Mark runs a limited company. It's VAT registered. He is an employee of that limited company. Okay, so his business is the employer, and they're providing him as an employee with a mobile phone. And the legislation includes costs for phones from providers to employees and reimbursing employees' own phone costs. Now, there are exemptions to the rules here. So the rules are quite clear. If you provide your employee with one mobile phone or SIM card, and if the phone contract is between you and the supplier, i.e., the contract for the phone has to be in the name of the business, not in the name of the employee. Otherwise, that's then expenses reimbursement, which is slightly different, slightly different rules. So the good news is Mark can buy a phone through the limited company, provide it to himself as the employee, and there are no personal tax and national insurance complications on that. So there's no benefit in kind because he's got just the one phone. So in this instance, you go, brilliant. Why wouldn't you? Why wouldn't you choose to do it that? Let's just walk through some calculations just so we can double check that whilst there are no tax and national implications from an employee point of view, is that still the best way for the business to make that decision? So I Googled iPhone 15. It's coming up. The cost of an iPhone 15 is £799. There is an iPhone Pro, which is a lot more expensive than that, but I've assumed that Mark's going to go at the cheaper end. And I've done some calculations here. So if Mark was going to buy this phone himself, he'd have to find £799. Now, I've made the assumption here that if Mark's going to find that money, it's going to come from his business. He is the director and owner of this limited company, so therefore he's going to pay himself a dividend out to get that money. Okay, so you'll be able to see from here, Mark won't, if he paid for it personally, he won't be able to claim back any VAT because he's a consumer, not a VAT registered business. So the cost to him would be £799. So that's what he would need in his back pocket to go and make this purchase. So in order to do that, he'd pay himself a dividend. Now that dividend, I'm assuming Mark is a higher rate taxpayer. Let's just, he looks like he, does well for himself. So I've assumed that he's a higher rate taxpayer. In order to get £799, he would need to pay £407 in personal tax to get that. So the grossed up cost to Mark of buying the phone personally would be £1,206. £799 purchase price, £407 in personal tax liability to get that £799. Okay, that's now starting to feel like a bit of an expensive purchase. So if we now look at it from the business point of view, we can see that if the business bought that phone for Mark, which is perfectly entitled to do, and he's VAT registered, he'd save £133.17 straight away because he'd be able to claim the VAT back on that purchase. So the net cost of the business is £665. I've assumed that the corporation tax rate is 25%. It might be 19%, but because I've assumed Mark's a higher rate taxpayer, let's just assume that he's also, earning over £50,000 profit in the business. That may or may not be the case. It won't actually change the overall outlook of this situation anyway. So Mark purchases the phone for the business. The business can write that off as a tax cost. I've assumed it's going to be written off to the P&L in year one. Some people will put that in as an asset and write off over a 3-year period. By the by, whichever way you prefer. I don't think it's going to make any difference over on the size of business that we're talking about. So would save the VAT, would save the corporation tax. So the net cost of the business of providing Mark with that phone at this point is £499. Okay. Now, one thing you need to bear in mind is that means there's less money to pay out as a dividend because the company's made less profit. But if you're given a choice between paying £1,200 for a phone and £500 for a phone, I think we all know which way we're going to lean with that. So one thing I've added here to take into consideration is If you do this personally, it costs £1,200. If you do it for the business, it's £500. So that means there's £700 saving there. Now, if I had that £700, I wouldn't be leaving it in the business. I'd probably be paying that to myself as a dividend as well because, I've earned it. Why wouldn't I want to pay it to myself? Taking into account again the income tax that would be chargeable on that of £360, you'd still end up with £347 savings. So overall, Mark's got his iPhone 15 and he's got an additional £347 in his bank account. So ultimately, it's kind of what are you going to do with that 347 quid? Because ultimately, you could pay for a nice week away. Lastminute.com, fabulous little holiday for yourself as well as your phone, and I think that'd be a nice treat for yourself on top of the phone as well. Just some other things to bear in mind here as well. I've just put some other considerations at the bottom. We're talking about the purchase of an actual phone here. You will also have the contract costs of that phone on an ongoing basis. Those, obviously, we want them in the business name. They have to be in the business name to avoid that benefit in kind to Mark personally. That cost, there'll be VAT on, and it will also reduce your corporation tax. So again, another big tick in the column of having this paid for by the business rather than personally. Just mentioned the contract must be in the name of the company. You can't claim the VAT back, and then obviously you've got an issue around the actual cost and potential benefit in kind. Reclaiming the VAT, and also reducing your corporation tax liability. So it's not just the cost of the phone in this situation. There are also many other considerations. One thing I've just put here flippantly as well is why spend all of that money on a blinking phone in the first place? To all intents and purposes, an iPhone 15 will do very similar things to what an Android phone will do. I personally wouldn't be wasting £799 on a phone, full stop. One comment here, how much was your laptop? We seem to spend an awful lot more money on a phone, which does a very limited number of things, versus what we'd actually spend on trade of the tools that we use every single day of our lives. So it's not for me to tell Mark not to buy an iPhone 15, but personally, if it was me, I could think of a lot more things that I'd rather spend that money on. I'd probably get an Android phone and then go on a 2-week holiday instead.